David Cohen joins us now from Singapore. He is Director of Asian Economic Forecasting at Action Economics. Thanks so much for joining us, Mr. Cohen. So all of the economists that we surveyed here at Bloomberg were predicting an increase from the Australian Reserve Bank today, many of them saying it's justified because you have strong economic growth, you have falling unemployment, rising house prices, and even sticky core inflation in Australia. So why didn't they raise rates today?
It certainly was a surprise. Perhaps the RBA just wants to keep everyone on their toes. When everyone is so certain, they like to demonstrate that they can throw you for a loop if they choose.
So what about the Australian dollar? Because that has sunk on the news of the Australian Reserve Bank's decision. Tell us how the strong Australian dollar has impacted the Australian economy.
The strength in the Aussie has weighed somewhat on their economic growth, but I think that they continue to outperform most of the other OECD economies, and thanks in part to the continued strength in demand from China. And I think that basic theme should continue to support the Aussie growth in 2010, and today's setback would just be a temporary departure.
Okay, well, let's talk about China then. Australia has already raised its rates 3 times. China's got the economy that's overheating. When are we going to see the Chinese raise their key interest rate, the one-year lending rate?
I think the Beijing policymakers have emphasized that they will remain patient. The most likely timing for a hike in their one-year lending rate we see as June. And even at that point, I would characterize the policy shift as one of normalization from what has been very accommodative Chinese policy. Both monetary and fiscal stimulus helped the economy rebound strongly from a slowdown a year ago, and it looks like the Chinese economy will grow by at least 9% this year. Last week, the IMF raised their estimate for the 2010 growth in China to 10%, I think underscoring the considerable momentum that China is bringing into 2010.
So this shift to normalization by China has provoked quite a strong reaction in the markets. We've seen markets pull back. Do investors look like they overreacted to this, so that they are overreacting still?
I think so. There's certainly reasons for the markets to be jittery, but I think at the end of the day, China, it's now going to surpass Japan as the second largest economy in the world. It certainly has a substantial footprint on the world stage. So with 10% growth, they will remain a powerful engine to sustain the global recovery supportive of growth.
We have to leave it there. Thanks so much, David Cohen there.